Yo, it's TN at TN Trading here. This video is a quick breakdown of candlesticks. By the end of the video, you should be able to read a price action chart and understand what it all means. I'll also be playing the price action game, putting the information we've taken today into practice, so definitely stick around until the end. If you enjoyed the video, give it a thumbs up. If you're new here, don't hesitate to subscribe. And yeah. A price chart is made up of candlesticks, and candlesticks are a representation of price. If price opened the day at a particular level, went down to its low, went up to its high, and closed the day above its open, that candle would be considered bullish. In the same way, if price began the day at a particular level, went up to its high, went down to its low, and closed the day below its open, that candle will be considered as bearish. It is important to understand the distinct differences between a bullish and bearish candle. Bullish candle represents an increase in price action, and a bearish candle represents a decrease in price action. Essentially, what candlesticks represent is price going up and price going down. So if you have multiple green candles, you have an increase in price. And if you have multiple red candles, you have a decrease in price. And in this video, I'm going to make it very simple for you. I'm going to use colors of green to represent increase in price and colors of red to represent a decrease in price. So when you see a box like this that says green means up and it's written in green, that means it's representing bullish movement. And if you see a box like this written in red, that means what this represents is bearish movement. In a market, pretty much when things get too cheap and price decreases too much to a level where buyers are looking to enter, people buy up the market when the price approaches the level, and when things get too expensive, people decide to take their profits by selling the market. And this is where you have a contrast in a downtrend followed by a big green candle indicating there's more buyers now, and then the contrast in an uptrend where investors, traders see a strong level and decide to sell the market. And these reactions give off more information about a candlestick. If a candlestick engulfs many previous candles, and by engulfing I mean it overtakes it by the high, and then it does that to multiple candles all within one candle, that tells us that there are many buyers at a particular level, and this can indicate a trend change. It is extremely important that when you're reading price action and when you're reading candlesticks, you allow the candlesticks to paint a picture. You allow yourself to read the candlesticks as if you're reading a book and as if you're reading a story. So for example, this candle, this bullish green candle, what I would understand from this candle is that price opened at this level. It went all the way down, so there were sellers initially at the open of the candle. However, price was able to push all the way back up to above its open and close as a green candle. And what this tells me is that during this candlestick period, there was a lot of bearish momentum, but the buyers took back control and the buyers allowed the market to close as a green candle. And this indicates to me that there are lots more buyers in this market, and this wick tells me that there's a lot of buyers at this level. In the same way, this red candle, what it tells me is that price opened at this level and buyers initially took control of the market. But by the close of the period, price was able to push all the way back down, sellers were able to take control, and we closed as a red candle. This indicates to me that there are a lot of sellers at this wick area, and this wick area acts as protection in terms of the sell. So a buy trend within this wick area and a sell trend within this wick area. When we're trying to paint a picture of price action and we experience something like this, which is a long wick up followed by a red candle close indicating there's loads of sellers, and then we get another candle which engulfs the previous red candle. This essentially invalidates this red candle, and now we are going to approach this as if this candle didn't even exist, because this green candle now indicates that there are more buyers than sellers, and this level here, the high of the wick, shows that there are more buyers above this level. It's important to note the high of a wick when you're looking for seller's protection. The same way in a bearish scenario, the low of the wick is where the buyer's protection is. And once the buyer's protection is invalidated here, and we get a close below the wick, now we're looking at bearish movement. So the wick of the high is another thing to look out for when analyzing charts and candlesticks. Alright, so just to summarize what we've been over, green candles tell us that the market is going up, and when we get a long wick to the downside followed by a green close, what this candle is telling us is that the long wick indicates that there are loads of buyers. And finally, we learned that a green candle that's very strong and engulfs previous candles is a very strong indicator of trend change. The same way in the reverse, red candles indicate the market's going down, a long wick to the upside followed by a downward close, so the wick indicates price action moved up, and then the close being a lot lower than the wick being above, that indicates that there is bearish pressure, and a strong red candle engulfing or not a strong red candle indicates there are loads of sellers in the market. So I'm just going to quickly go over some price analysis on some actual price charts just so we get an understanding of what I'm talking about. Alright, so as you can see here, we can see long wicks to the downside at key level, and then we finally got a green candle, and the green candle indicates to me that price is trying to go higher. We get a second green candle, and now I believe price is going to go up. And as I'm reading this price action, I'm going to read it in a way that's kind of like a story. So we're green candles, green candles, green candles going up. Then we get a long wick to the upside and a red close. This indicates to me that price action could potentially be bearish, and we've got this area as a protection for sellers. The next candle's green, however, we still know that this area is a protection zone for sellers, and now we've got a protection zone on the lower side for buyers. So I can now see that we were potentially going to trade within this zone until we finally get a green candle, which indicates to us with bullish momentum, a wick to the downside, that price action could be trying to break higher, which we do eventually break higher. At this point here, we now get a red candle, and this red candle tells me that this could be a zone of protection. Obviously, we don't know at this point that this is a major zone of resistance, so I'm going to just get rid of that for a moment. If I keep this level as a major level for one moment and make that slightly thicker, as you can see, price action is playing around this zone. Although we do get a breakout, we get a huge red candle at this point here. And this huge red candle indicates to me that price is holding this zone and this area and this major level of sellers protection. And this was just an opportunity for the sellers to sell the market downwards. And after this huge red candle, we made the decision that we're not going to go higher. This false breakout turns out turns into a downtrend where momentum is bearish, 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 bearish. And as you can see, we have another protection zone here, and we have the continuation down to the lows. At this low point here, we are at major support, and we have this area as a protection zone. And then as you can see, we print a green candle. Price is unable to close below the protection zone. We print a green candle, and then we're off to the races, up to the next level of resistance, which happens to be our previous resistance. And now it's just simply bouncing off the zones. And then at this moment here, when we come back to this level of support, we get another green candle. At this point, just trading the zone, we get another green candle. We start printing green candles, green candles, green candles, telling us we're going higher. Price continues to go higher. Up until here, where we get a huge wick. We get an extremely high wick. And at this point, we know this is a protection zone. So at this moment in time, price ends up just bouncing off the zone, creating some levels of support for it to end up attempting to break higher. And as you can see, the protection zone protects this area for a long period up until we're able to get above the protection zone, and then price action is able to finally break out to the high side. So as you can see, the simple ways that I use to analyze the markets are actually very, very simple strategies, simple reading of price action and candlesticks, and we're able to determine where the market's going to go. All it is green candle means we're going higher, red candle means we're going lower, long wick means we're going higher, protection zones, areas where we know there's loads of buyers, etc., loads of sellers, green candles mean we're going higher. And it's pretty much repetitive. If you're able to read price action, and this is on a naked chart, you can see that I'm not using any indicators. It's a naked chart with naked price action. I'm just going to quickly transition onto a price chart game, and I'm going to show you that I can do this live on the charts with price action, and pretty much, yeah. Let's see if I can get some trades in, and here it should show my profit to loss. I'm going to do 3 trades. Alright, so we're printing red candles. We print a green candle around our support. I'm going to buy here. We've got a green, still printing greens. We've got a red print, but I'm going to allow it one more candle. Green again. Now we're higher. Red candle. We've got a protection zone, so I'm going to leave it one more. Green. Alright, let's not get greedy, and I'm going to sell that out. That's 12,000. Let's see if I can get another opportunity. Well, maybe I shouldn't have sold. I definitely shouldn't have sold. But now we're approaching my support right here. If I can get a green candle around here, I'm going to look for a buy entry. Protection zone. Maybe I'll get an aggressive. Let's try it. And there we go. And profit again. We've got a protection zone, but I've got this area here, so I'm going to hold it out. And I'm going to get out of that one for break even. Let's see if I can get one more trade in. Alright, we've got a green candle here. I'm going to buy it. Now we're up. We're still up. Doji. Back in green. Oh, that one's in loss. Let's give it one more candle because we're at support. Alright. And then that one's a loss. So I'm going to close that one out. Oh, gave it back. But as you can see, it's pretty straightforward. Let's see if I can get one more trade in. I think that's a green candle, and I am at relative support, so I'm going to buy here. And then we're up, let's see. Oh, that one looks like it's a loss. Let's see if we can bring it back. Nope, that one gave away all my profits. I'm just going to close that one out. But as you can see, it's pretty straightforward. That's 3 trades I think I took, or 4 trades at break even. But if you have the right, correct risk to reward and money management, you should be profitable in the long run. So yeah, that's that. I'm going to end it there. It's TN Trading.